Hi, good morning. My name is Kaysian from Kaysian Financial Planning. And this morning, I wanted to talk to you about a topic that has come up a few times over the last couple of weeks. How to pay down a mortgage faster, especially in this day and age where mortgages are at rates that we have not seen in probably close to 20 years. I've been seeing numbers above 8% if you wanted to get a current mortgage. So, as you are looking at all your bills, and if you are in a position to pay down your mortgage, one of the ways that you can do so is to pay more on a monthly basis towards the principal. So, typically, a mortgage, the two main components of a mortgage is the interest and the principal. The principal is the main amount that you have borrowed, and the interest is the interest rate that you have to pay back based on what you had agreed to. So, in order to pay off the mortgage faster, you can pay towards the principal. If you put more towards the principal, so if you can afford an extra 100, 200, or even if it's just $50 a month extra, if you can afford to do so, and you want to, that you can put it towards the principal payment, and it will decrease the mortgage, or the term or the time frame that you pay off the mortgage. Now, one of the things I want to add to that is if you have other debt, and so if you have credit card debt, and that might be at 15 or 20 or even 25% interest rate, I would actually encourage you to try to pay that debt down faster, instead of putting the money down towards the mortgage. Um, the credit card debt is costing you more in the short term than the mortgage based on the differences in those interest rates. As you are working and paying off debt, I encourage you to pay off what's called consumer debt or credit card debt faster, because those are typically at higher interest rates than a mortgage. So the mortgage should probably be one of the last things you tackle. Again, I have to put a lot of disclosures around this, making sure that you understand what the interest rates are, what it's costing you, and the best way for you to do it based on your own personal situation. And I often see questions on how do I increase my credit score? You increase your credit score by paying off some of the debt that you have, by making sure that your credit card usage is not too much of a percentage of the amount that you're able to borrow. So if you are able to borrow $5,000 or $10,000 on that credit card, you don't want to have them maxed out. You want to try to get them, and I'll just say 50% below 50%. So if you have a $10,000 balance that you're able to take out, you want to make sure that you owe less than $5,000 on that credit card. You also don't want to have too many credit cards outstanding based on your income and how you're able to pay. So I don't think there's a magic bullet of how to increase your credit score. I think it really is with paying down your debt consistently over time, and you will start seeing your numbers improve. And again, check your credit scores, and if there's or credit ratings, and if there's anything that's on your credit that's not yours, you want to reach out to the credit agencies. So I know I just covered two very major topics, but I believe that they go hand in hand. One is paying down debt, especially if you have mortgage debt and you're interested in paying that down. Look at what other debt you have outstanding and if those should have a higher priority than paying off your mortgage. And also, if you wanted to improve your credit score, making sure that you're paying your bills on time, you're not just paying the minimum payments, and making sure that everything on your credit report belongs to you. My name is Kaysian from Kaysian Financial Planning, and I look forward to talking to you in the next video. Have a great day. Bye.